Welcome back to the Dividend Diplomats YouTube channel. I've got Landy, Bert. You know us by now, everybody. We are the Dividend Diplomats. Today, we are putting two Dividend Kings in the ring to see who comes out on top in this battle of heavyweights in the greatest battle dividend stock royale out there on the eve of WrestleMania.
Now, let me tell you something, brothers. Smash that subscribe button. Give Bert the Hurt and Lanny a nice thumbs up, because we're going toe to toe in the squared circle, brother. And Bert, we're going to have to find out which dividend aristocrat comes out on top.
Oh, that's right here. So everybody, what are we going to do today? One of these companies that's going to be featured has been asked about in our comment section for a while. They have taken a beating so far in 2022. So everyone's been saying, where's your stock analysis? When are you going to give us an update on this company? So rather than do a solo stock analysis, we wanted to pit them against a competitor just to see how undervalued they are. Or are we just ignoring them and going for the competition right now? That's really the point of these dividend stock royales. Pit two head-to-head against each other and see which company reigns champion.
Guys, we're filming this here on March 29th. S&P 500 was up yet again today, about 1.23%. First, they crossed 4,500 last week. And guess what? They've now crossed 4,600 today. So, Bert, the S&P 500 is en route back and climbing back and climbing back to that record high of right around 4,800.
Lanny, you think they're going to get to the ladder up and be able to grab the briefcase here on this one?
I think, hey, Chico, it's a race at a mall. I'm not going to let Shawn Michaels take the title here, essay.
Yeah, well, let's see. Is the economy, our interest rates, our geopolitical issues, are they going to kick the ladder out right down and knock the S&P 500 down and stop them from grabbing that record-setting belt there?
So, guys, exactly. We'll have to find out, Bert. But like you said it, things are all over the place right now. The stock market is still climbing upwards. The crypto market has also been insane. Bert and I keep sending messages every single day. And I have to share this one. I was like, so, Bert, it looks like the crypto market cooled off. And he goes, yeah, it didn't go up 7%, but it was up a little over 1 or 2%.
Yeah, it's insanity what's going on there. How quickly things rise, how quickly things fall, how it takes a stomach to play in the crypto market. That is for certain. But it is exciting, Landy. I will say it was a fun exchange we had there.
Very funny, but that's why we're also dividend investors. That's why our main stage of the game is dividend investing. Why? Because it's lower volatility, typically lower risk, and it provides a growing passive income stream. So, Bert, you put these two dividend aristocrats in the ring, and they're going head-to-head over 3 dividend diplomats stock screener metrics.
All right, price to earnings ratio, payout ratio less than 60%. We'll see which one has the lower payout ratio if they both pass. The dividend growth history is there. After the first 3, we're going to look at that bonus metric, the dividend yield. That's the name of the game right here. Those are the metrics. Those are the bonuses. You know what, everybody? It's time. Lanny, should we do the big reveal, play the entrance music, and see who is coming down that ramp?
Cut the music. Are you about to do the John Cena "You Can't See Me"?
Bum, ba-dum, bum.
Oh my gosh.
Ba-dum, bum.
All right, guys. Now we're stepping in the ring here. Again, now, Bert, are we going to do each metric, company, or one company metric, one company metrics?
I think let's go metric versus metric, and then we'll summarize them at the end and draw the conclusion.
All right, let's hit it. What do you got?
Right. Company number 1, been a thorn in my side. They one time were a darling for my portfolio. They were on my 5 always buy stock list, a list that I continue to say that I need to reevaluate, especially after many years of I think I published it in 2015 on our blog, something like that. This company is 3M company, ticker symbol M. At least the ticker symbol makes you laugh. They were able to secure the 3 M's as their company. That's about all the good feelings I have right now for 3M.
In the words of Stone Cold, that's all I got to say about that.
Yeah, so Lanny, you want to tell us about the other company?
Guys, we're looking at Illinois Toolworks. Ticker symbol is ITW, and stock prices are going to be as of March 29th.
Yeah. So to level set here, 3M has had a terrible 2022. There's nothing more to say about that. They are down 14% year to date. Over the last 52 weeks, they are down 21%. This company has kind of been stuck in neutral, and it's been frustrating from that standpoint. I'm going to save a little bit of the frustration when we talk about the metrics, though, and there's another piece in there, but I'm going to save that from there. So you've asked about it. We want to see how they're doing. Their competitor ITW, on the other hand, is only down 10% year to date, down 2% in the last 52 weeks. So it's fun to see how these competitors go head to head.
Yeah, very interesting. And not only are these two dividend aristocrats, but they're also two dividend kings, 50 plus years of dividend on each side, over 100 combined years of dividend increases when you combine the two. So Bert, 3M, let's start with the price to earnings ratio. They were trading at $152.08, with analysts expecting a whopping $10.40 going forward. So 3M's price earnings ratio is looking pretty nice at 14.6 right now.
Sure. Compared to Illinois Toolworks, their price is $218.57. Forward earnings are $914. That gives you a PE ratio of 23.91. So barely a discount compared to the S&P 500. But when you look at them side by side, there's a clear winner here. 3M has the lower PE ratio by a long shot.
Yeah, so the S&P 500 is at about 26. So just to give people frame of mind, 26 times earnings. Okay, all right, well, let's dive into that dividend payout ratio, because we all know these are dividend growth stocks, dividend stocks that are in many dividend investors' portfolios, as we've seen in the comments, as we've seen from you, the community. You love these two stocks. So Bert, 3M pays $1.49 per share per quarter, or $5.96 per year. That payout ratio is Mr. Perfect. Kurt Henning throwing the two at you at 57.31%.
Let's see if ITW can throw the blow back right there at 3M, because it's hard to beat a perfect payout ratio. $4.88 is ITW's annual dividend. Divide that by the 914, a 53.39%. Hey, they gave the low right back. Both companies, this one's pretty equal right here. Head-to-head tie, because both have perfect payout ratios. It doesn't get much better than that.
Well, hey, hey, let's dive into that third dividend stock metric, that dividend growth rate. So guys, 3M announced a dividend increase this year. It was their 62nd increase this year in a row consecutively, or 63rd, I believe, possibly. Either which way, they kept that streak going. They're a dividend king. What did they do? They increased it by 1 penny, a nice 0.68% this year. Ooh-wee.
Yeah. Interestingly, their 5-year dividend growth rate is 5.75%. And like me, you can tell 3M's has really stopped growing that dividend there, because the last few years have been like this year for 3M, and it's been extremely frustrating as a 3M shareholder. So if their 5-year dividend growth rate is 5.75%, Laney, in their last 2 to 3 years have had 1% dividend increases, what does that tell you about what it used to be to where it is now?
Used to be solid.
Yeah.
Factor in low dismal dividend growth rates, it's really putting the anchor in. You know, definitely have to stay in tune with 3M if you're a shareholder. I know Bert is, I know I am, because maybe the law of averages comes out to play at some point.
Yeah, so let's see ITW, also Dividend King, increased that dividend for 51 consecutive years there. Their 5-year dividend growth rate, on the other hand, 14.48%.
Ooh, I really obviously prefer that.
Yeah, I would say so as well. Let's see the bonus metric here, Lanny. What is 3M's dividend yield?
Guys, the yield is about 3 times the S&P 500, which is about 1.3, 1.4 times, or 4.4%. Which again, every $100 you invest in the S&P 500, you currently would get paid about $1.30 to $1.40. With 3M, the yield is actually 3.92%.
Not bad. You can't complain about that. Compare that to ITW, 2.23% dividend yield. So premium to the market. Premium to the market, but obviously 3M takes the cake with this. So Lanny, do you want to summarize the metrics here for 3M?
3M, they had a 14.6 times earnings on the price to earnings ratio, a 57% dividend payout ratio. They have a 5-year dividend growth rate on average, 5.75%, increasing it for over 60 plus years with a yield of almost 4%.
ITW, PE ratio 23.91, payout ratio 53.39%, 5-year dividend growth rate 14.48%, increase that dividend for 51 consecutive years with a yield of 2.23%.
Well, there you have it, guys. So right now you've got 3M winning the price to earnings. You've got ITW technically winning the payout ratio. ITW wins dividend growth rate. They both matched up in the number of years. Both are kings. Kings are kings. Yield, 3M wins. Both are above the S&P 500. So Bird, which one is the victor?
From a pure undervalue, which one's a better value right now? Which one offers you more of a yield? It's clear that 3M takes that cake, but there probably is a reason why that they're trading at a discount compared to ITW too. So I want to make sure that's clear. Right now, at least for me, am I adding to either of my positions in these two companies? No, I can't add to 3M until I see more from the dividend growth perspective. It's been extremely frustrating seeing dismal dividend growth from the company. What are you thinking?
I agree. There's not one clear buy this stock right now. If you had to buy something, you, again, do your own research, not professional advice. But, again, 3M, low price to earnings ratio, you get paid to wait possibly for better performance. But again, if you're looking for that current income, that's kind of where we're at, is we're trying to build that passive income stream on that journey to financial freedom.
Yeah. Look at previous videos. We put out watch lists. Go to our blog. There are plenty of other undervalued dividend stocks in this market that I'd rather focus my attention on. Lanny would too. So for now, it's a draw. We're not taking either, but let us know in the comment section what you think about 3M right now. What do you think about ITW? Are you buying both, neither, one, or what other stocks are you watching instead? Please let us know below.
Exactly. So you guys heard it there. No clear buy here. If you hold them, just hold them. This one probably looks like two guys grabbing the title belt and both landing at the ring at the same time. So not a clear winner here. Again, if you haven't subscribed yet, definitely do that. Like the video. And again, Bert said it. Let us know in the comments what stocks you're buying right now as the stock market is going up. That was Bert and Lanny from the Dividend Diplomats. Over and out.